Good afternoon. This is Tuiaana with RJO Futures in Chicago, coming to you this afternoon on Wednesday, March 20th, 2013. Going to run down the soft commodities markets with our afternoon wrap-up here. Starting out with cocoa, jumping right into it. Last trade at 21.49. That puts cocoa up 50 ticks on the day, so 21.49 per metric ton. We do have Easter coming up, so I think it's getting the cocoa market's getting some support from the Easter holiday. In addition to that, I think what's also lending support is we've seen the British pound start rallying. That market looks pretty firm. Actually, an outside day up today at the end of the trading day, so that's also pretty bullish. That's helping to create some opportunities for arbitrage in cocoa with the ICE exchange against the New York Life Exchange in cocoa. So I think there's an opportunity there. We are still waiting on the European grinding totals for cocoa, which will be a good measure of what the demand for chocolate will be. We don't expect to see those until next month, though, mid-April. So we are looking out for those grinding totals. 21.50 was what I mentioned last time. We have been in a massive downtrend with cocoa for a while, and 21.50 happens to be the area that was broken on that trend line to the upside, 21.50. But shortly after that, and that was in my last video that I mentioned that trend line, we retreated from that 21.50 level pretty quickly, and we sold off. Although it's a positive day today and a pretty big positive day, I'm going to still be continued bearish for a little while. That 21.50 area that I mentioned will be our area of resistance, our area of attention to the upside, while on the downside, 20.75 will be our next area of support. Moving on to coffee, which last traded at 132.85, and that's in the May contract, puts coffee down 25 on the day. Coffee, for 7 consecutive trading sessions, has managed to make lower lows. So that's pretty bearish. It's overwhelmingly bearish, in fact. Most of that coming from a huge 2012 supply out of Brazil. So that's adding some pressure onto the market. In addition to that, the Eurozone and the issues that they've been having over there, there's big coffee demand usually out of the Eurozone. There's a lot of traders believe that there's some fears associated with that, so that's adding some additional pressure onto the coffee market. Although the Roya fungus is still a very real issue, I believe long term, I don't think it can fundamentally counterbalance what's happening with that large supply in Brazil. So in my last video, I mentioned the 137.60 area as being the next area of support. Well, that area has in fact been broken. The market again last trade at 132.85. So that area of 137.60 is now our new support, while on the downside 132.25, 132.25 will be the next area of support. And by the way, that 132.25 has not been visited since November of last year. So moving on to cotton, last traded 89.10, which puts cotton down 203 on the day in the May contract. Very, very big day down for cotton. As you know, I have been bullish for a while. The main thing to watch is going to be China. What is China going to do? Are they going to continue to be aggressive buyers as they have been, which has pretty much been already discounted into that price action? We've seen cotton really take off for a while now. But can China sustain that buying? It's been discounted in the market. So China has, in fact, been buying up a lot of cotton. They have in ending stocks about over half of the world's supply of ending stocks of cotton. So will they release some of those stocks that they have, or will they continue to buy? That's the main thing that we're waiting that we're watching over here. If you look on the technical side at a daily chart of cotton, you can also notice a bullish symmetrical triangle or a bullish pennant, which is usually a continuation pattern of the prior trend which was in place, which in this case is up. And if in fact it breaks the top of that triangle, which is the 93.93 area, then it could have a measuring objective to reach well above $1 per pound. On the downside, you want to kind of keep that 89.80, 89.80 as your next area of support. Also beware if you're long cotton right now in the futures. There was an outside day down, a massive one today, so keep an eye out for that. Moving on to sugar, which last traded at 18.32, put sugar up 1 on the day in the May contract. We've been looking at that 19-cent level for a little while, and that area has posed some very good resistance so far. So it last traded again well below that 18.32. It went to challenge that 19-cent area and retreated from that area pretty aggressively, most in part by a huge global surplus that's been in sugar for the past 3 years, large production outlook out of Brazil. So keep an eye on that 19-cent level. That should pose still some very, very good resistance. We did manage, on my last video, I mentioned 18.48 as being the next area of support. Violated, of course, to the downside. So I'm continued bearish on sugar for a while. Look for that next downside support to be 17.88. I think that area will get taken out and more down is to come. So if you do have any questions on any of the futures markets, you want to talk about strategies in plain English, you can give me a call at 312-373-5392. Please keep in mind that there is risk associated with futures trading, and it is not suitable for all investors out there. Have a great afternoon.